Big news out of the Federal Reserve this week. Not only is it their January meeting to determine monetary policy moving forward, but there's also a new Fed chair that's going to be announced on Wednesday. Good afternoon. We have a very interesting week ahead. It's Fed week, meaning the Federal Reserve will hold its January meeting to determine the next step for monetary policy. Most experts expect the Fed to leave the Fed funds rate, which is the overnight rate banks use to lend to one another, unchanged in the 3.5 to 3.75% range, following a 25 basis point cut made in December. Another major headline this week is the announcement of the next Fed chair, who is set to replace Jerome Powell when his term ends in May. That announcement is expected on Wednesday ahead of the Fed's post-meeting press conference. Many believe this timing is strategic, potentially aimed at limiting any market-moving commentary that Chairman Powell has become known for over the past few years. Adding to that uncertainty, the Fed hasn't received much new economic data since its December meeting, making it harder to assess whether conditions have meaningfully changed. We'll have to wait and see how it all plays out, but for now, let's take a look at what happened last week. Here are your headlines. The government released the Delayed Personal Consumption Expenditures, or PCE, report for October and November, with results largely matching expectations. Headline and core inflation both rose 0.2% in each month, leaving the annual rate at 2.8%. Core PCE, which excludes food and energy, is the Fed Reserve's preferred inflation measure. The Fed is stuck in the middle right now. Inflation hasn't fully gone away, so they don't want to cut rates too fast. But at the same time, the job market is continuing to cool, which usually pushes the Fed toward lowering rates to support the economy. The good news is inflation has been behaving better month to month. Recent inflation readings have been relatively low, and as some higher inflation months from 2025 drop out of the annual numbers, it should be easier for inflation to keep trending in the right direction. What does this mean in real life? Rates may be choppy short term, but the bigger trend still favors gradual improvement. That keeps buyers in the game and supports more activity as we move through the year. Now, after a delay caused by the government shutdown, the final estimate for Q3 2025 GDP is in. The US economy grew at a 4.4% annualized rate, slightly above the initial 4.3% estimate and the strongest quarterly growth since Q3 of 2023. This marks a clear acceleration from the 3.8% growth in Q2 and sharp rebound from the 0.6% contraction in Q1. For the first 9 months of the year, the economy is now averaging 2.5% growth. The economy is still growing and is holding up better than expected. Consumer spending remains strong, which matters most because it drives the majority of economic activity. A big chunk of that spending came from people rushing to buy electric vehicles before a tax credit expired. Growth also got help from businesses investing more and higher government spending and stronger exports. On top of that, fewer imports actually boosted the GDP number overall. So what is the bigger picture? First-time claims remain low, reflecting limited layoffs and the growing role of the gig economy. More displaced workers are choosing contract or app-based work instead of filing for unemployment, as benefits levels often fall short of covering housing, living expense, and insurance costs. At the same time, continuing claims remain elevated, signaling that unemployed workers are taking longer to find new jobs. As I mentioned to start, this week's focus is squarely on the Federal Reserve as it begins its two-day policy meeting on Tuesday, with the rate decision and press conference scheduled for Wednesday afternoon. Given cooling inflation and slowing labor market, the Fed is expected to hold rates steady, keeping rates sensitive to incoming data rather than any major policy shift. Alongside the Fed, we'll get several important economic updates, including home price data from Case-Shiller and FHFA on Tuesday, weekly jobless claims on Thursday, and December's producer price index on Friday, which will give insight into wholesale inflation. Together, these reports will help shape the rate movement and buyer confidence as we move through the week. I'll be sending an update on Tuesday of next week, but for now, enjoy the rest of your January.